Hello, and thanks for joining us for today's webinar, which is the third in our series on the new revenue recognition updates. We look forward to hearing from our speaker today, and I just have a couple slides to go over before we get to that. First, as you may know, Xactly is now a publicly traded company, so the information shared in this webinar is based on best practices and not an indication of future company performance. Also, just a couple of housekeeping items to remember about the event today. This webinar will be recorded and shared in a post-event email, so keep an eye out for that. And we'll be hosting a Q&A session today, so feel free to submit your questions at any time throughout the presentation, or if you just think of them after we're done with the presentation portion. There's a Q&A button in your webinar dashboard there. And to get things started, I'm pleased to announce our speaker today, Caitlin Steele. Having spent the better part of her career in a variety of industries, leading accounting and audit functions, Caitlin now works in product management to bring usable, real-world solutions to financial processes that challenge us every day. She's passionate about automating the mundane, doing things right the first time, and improving the everyday lives of accounting teams. And with that, I'll turn it over to Caitlin.
Thank you, John, and thank you all for joining us today. We're getting a lot of interest in this topic, so many of you must be hearing about it and ready for more information. So today's session, we're going to give you an update from the recent Financial Accounting Standard Board meeting, and then we'll move on to discuss how you can use Incent to support your accounting team in meeting the new standard. As John said, we do have plenty of time today for Q&A, so happy to answer what questions I can. So go ahead and feel free to add those anytime in the panel, and we'll get back to you. So let's jump right in. The board responsible for addressing the transition met last week and to discuss the public's concern over the requirements. And the meeting actually was especially to address the standards as they relate to accounting for commissions. So lots of information in that meeting. The November 7th board meeting did not change any of the existing requirements or documentations about how to account for incremental costs. However, the staff did clarify a few points. First of all, many companies were hoping for simplification to simply expense commissions over the contract term. But the staff stuck to their interpretation that the cost should be expensed over the term for which the company receives benefits. This could be the contract term for some strategies, but in many cases, it may be more or less than the contract term, just depending on the circumstances of how the company delivers the related product that was sold, so the product that was related to the commissions paid. For example, in Xactly's industry, in the SaaS software world, many companies will probably need to expense over the life of a customer or an approximated life of the customer, which is typically longer than the contract term. And the reason for that is because we anticipate that our customers typically renew their contracts with us. And so in the SaaS world, it will be common to do that. And however, in other industries, buildings, for example, if you're in the construction industry, something like that, it's probably appropriate to look at expensing over the term of a contract, but it's really going to be highly dependent, and the board really stressed that every company needs to take the time to understand their sales and commission strategy and apply good judgment to determine what's right for them. This is done elsewhere in accounting. When we have things like intangibles on our balance sheet, we frequently have to apply judgment. So we're just expanding the scope of that kind of accounting to handle this commissions area. In addition, several companies had proposed a method for using the relative effort of a sales process to determine the amortization period. So, it's much more difficult typically to acquire a new customer than it is to do a renewal. And so they said, that effort could be one of the judging factors to determine the period of amortization. But the board really discouraged that approach in this meeting. It's not a level of sales effort that is to determine the amortization, but really the time over which the related product's going to get delivered to a customer. So that kind of got debunked during the meeting. The net of the meeting at the end actually was just that we know the standard's going to remain as described in today's documentation. There'll be additional interpretations coming out, but it means that right now we have a good understanding of what the requirements are, and we can jump into addressing it for our own businesses at this time. So with that said, many of you may recall from my earlier presentations that I believe there are 3 challenges to handling this new standard. Getting the right data, making accounting estimates based on that information, and then managing the amortization of the asset over time. The output of this process is typically be a set of journal entries to address the asset calculation and then the expense related to the commissions. And as with all financial data, we need to have that auditability across all of those steps, right? So in today's presentation, I think it's really important, and the kind of my imperative today is that we focus on ensuring you have the right information to support making intelligent estimates and developing workable methods for managing that amortization. And so that data, which is typically the responsibility of the commissions group at companies, is really foundational to being able to meet this standard. And without the information, there's really no way that your accounting department can support making those entries and without being able to produce good financial statements that are auditable. So pretty important that we get this data right. So with that said, let's talk about how we're going to configure data in Incent. In my experience in the past with addressing new accounting standards, the smart approach to tackling it is to take these types of changes and start simple. Organize that incoming information and use existing tools to kind of iterate on the methods that you're going to use to get the right information, and iterate on that method until everyone's happy with the results. And everyone in this case, meaning not only you in the incentive calculation world, but the accounting organization for your company, as well as your auditors, right? Are you presenting a complete picture to everyone? So let's move on. I'm going to show you in Incent some of the things that you can do to actually produce this data. This is another slide from an earlier webinar, and you probably remember it. It's a pretty standard approach to tackling a project, right? So we're going to walk through a little example today for getting this data put together. It's for my favorite SaaS software company. We call that company Cloud Corp. And let's assume that I've already assembled a championship team and I have a very good handle on my existing data. So the next thing we need to do is working on step 3, which is identifying the data you'll need. So it's time to sit down and discuss really what data we're looking for in this particular case. And so this step, in my opinion, is kind of like when you're getting ready to paint a wall. This is the preparation phase, and it takes a little more time, and you have to invest up front. In fact, every time I've ever had to paint something, it takes me way more time to prep than it actually takes to put the paint on the wall, right? But when I do that preparation well, and I have done a good job of thinking through that and getting the tape in nice square lines, I get a much better result. Right? And it makes it easier in the long run because I don't have to go back and try to scrub something off that was a mistake. So we want to take that approach, right? And so let's take a look at how we would do that for Cloud Corp. The first thing that this group would really need to know is, what are the commission strategies for Cloud Corp, right? So this dynamic duo, Jane and Tony, these two work together an awful lot at Cloud Corp. Jane's our hunter. Jane goes out and seeks out new customers. She works with prospects and she closes deals, right? And then she hands those deals over to Tony, where he steps in with new customers, and then he manages that relationship over time. I suspect many of you have similar sales organizations. You may have many types of Janes and many types of Tonys, but typically a lot of us have this kind of breakdown. In Cloud Corp's strategy specifically, Jane's incentives are really focused around acquiring new customers. So she has quotas for new business and for cross-selling. And Tony's incentives are really around keeping customers, right? So he has quotas based on renewal, but he of course also has cross-sell quotas. So there's some places where their strategy is a little different, and some places where they kind of overlap in their strategies. And so as the team and I for Cloud Corp are sitting down to discuss how we're going to handle collecting the data we need to address these different methodologies, we might ask some questions like, can we see in our data today the total commission paid for each new customer acquired? So when Jane goes out and sells to a new customer, she may not be the only person commissioned on that particular sale. Maybe her manager gets a piece of that. Maybe a sales engineer gets a commission based on that positive result of acquiring that new customer. And so can we see that? Can we see the total commission by customer? We might ask ourselves, do we expect to continue to do business with this client? Or said another way, are renewals likely? You know, when we sell this product type, do we typically renew on that product type? I've worked in companies where we had products that were normally renewed, ongoing sales, and we've had other products where no renewals was anticipated, particularly when I've worked for companies that produce both hardware and software. You may sell a piece of hardware and that hardware may live on, but I don't expect people to buy more. But the software, we might be renewing via maintenance contracts or something. We might be renewing that on a continuing basis. So we need to know that, you know, how do we expect this product to live in the market? Another question we might ask is, you know, are the commissions that we're paying for that renewal? So when we pay Tony to renew that contract, are they commensurate with the commission that we pay Jane for that new business? And typically we find that no, they're not. In many environments, Jane gets paid a premium based on the fact that she has to work pretty hard to acquire a new customer, right? And so maybe in a really good year, Jane brings on, you know, 10 new customers, but Tony is able to have quite a backlog, and maybe he's supporting 50 or 60 or even 100 existing customers. And so, you know, the commissions paid in those arrangements may be significantly different, right? And we need to know that information as we get ready to identify what we need to calculate the appropriate amortization periods for. And then last question we might think about in this particular case is when we do that cross-selling. So when either Jane or Tony cross-sells something to that customer, does that sale impact the goods or services we already sold to the customer? So, you know, does getting an add-on product into that customer's hand, does that change the life of that original product we sold? So we need to understand those things. But once we understand the nature of our transactions and how they impact what we sell, we can then understand the data we need to collect. In Cloud Corp's case, we would need to know commission by customer so that we can calculate that total commission on a new business. We would also need to know in Cloud Corp's case, we'd need to know renewals, right? So that we can compare the amounts paid for renewals, and see how does that renewal stack up against that original commission. In addition, as we're selling add-on products, we may have some add-on products that don't impact the life at all of the original sale, and we might have other add-on products that do impact that. So in Cloud Corp's case, I may want to know not only what customer did I sell to, but what product did they purchase, and what type of product was that. So lots of different pieces of data and different outputs than what we're accustomed to seeing in commission calculation today. So in order to provide accounting with this right data, we have to capture and report on first-time sales, renewals, and renewals by product, by customer. So that way, accounting can track the impact of each of these, make those estimates, and make good long-term mathematical decisions about how to amortize that information. Now, of course, once again, this is a pretty simple strategy, right? Many of you will have really much more complex strategies than what we're dealing with here. But my point in describing this is that spending this time and delving into understanding your company's approach and the various methodologies by which you pay commissions, working with your accounting team up front to understand that is going to make the job much easier. So this is like laying down the tape clean when you're painting a wall. It takes time to get it right, but once you have it, it's solid and you're good, and you know that the resulting information is going to be much easier to produce when crunch time hits you, right? And crunch time is coming. This standard, companies will be required to adopt this standard in the near future. So that's kind of my little story, my setup for an example that we'll talk a little bit more as we talk about how this might work in Incent, right? So Incent already has a bunch of pages or data available that you can capture in Incent that is sticky with the commission calculation, right? So if you bring in transactional information, you can attach to it information about that transaction that carries all the way through to the commission result. So you can tie that commission all the way back through these various pieces of data to be able to get the right information out. So let's start looking at the kind of data you work with every day, right? Most of you deal with you've probably had some experience with setting up a system to capture this. If you're not using Incent today, some of this will be new to you, but you're probably already handling this kind of data. Starting with quotas. And this is a typical quota screen in Incent. You know about quotas, right? Sales quotas are a pretty common practice out there. And what's interesting about a sales quota is that these can be super great at helping us understand strategy. Most of you are establishing quotas based on the kind of activity or the kind of transaction that you're trying to drive into your business, right? So a lot of you will have a quota that is different for someone for acquiring new customer than a quota that they might have for maintaining an existing customer. So quotas already have strategy built in. And in Incent, we have some feature functionality in quotas that will help you with that. There's a quota classification field. You can use that to further refine quotas beyond just the quota name itself. And because you've all joined us here today, I can tell you a little bit. We are adding the ability for you to have custom fields on your quota record. So if you really wanted to identify a quota type to drive forward with this standard, you can look forward to having that quota custom field in Incent in the very near future. So a little bit of roadmap information for you there. In the case of Cloud Corp, when Jane is selling those new customers, she has a quota specifically for new customer business. So that's pretty great for our accounting team, because I can simply go to that quota and I can summarize data based on that quota and say, here is all of the commissions paid against this type of quota, and we can summarize that up for you in reporting and share that. In addition, another screen that might help you a whole lot, another piece of data generally captured, is when you're using a system like Incent, we have what we call a rules engine, right? The rules engine tell us how to treat a transaction. So we might have a rule that defines how we calculate that new customer commission for Jane, right? The thing that many of you may not be aware of in the rules is that you can have multiple types of results on a single rule. So this particular rule, this is a blank rule, but I could set up this rule to show you multiple results types. So the same rule could be fired and return, in the case of like an add-on where we need to know what product it was, we could have a result name that was product specific. So we could say on this particular rule, when it fires, if the product related to this transaction is an add-on product that impacts the life of my original sale, I could put a rule in there that said that's the kind of result I want to capture. I can give that result a specific name, and I can then search and produce reports against that result name to be able to identify the different kinds of commissions that might be paid against a single transaction. Sometimes we have, a sales order that gets different commissions paid to different people based on different kinds of scenarios, and if you need to capture those, you could just simply create a result to be able to do that. In addition to quotas and rules, Incent allows you to capture a bunch of company data along with your transactional data. And so first of all, if you want to, you can capture your customer data, and that will probably, for most of you, will be something that you'll need to have on that transaction, and you'll need to be able to tie that to that commission paid. So a few of you may be able to use more of a what we call a portfolio method, where it doesn't really matter what the customer is. But at the standards board meeting last week, they implied that most companies will not be able to use portfolio method unless you're selling very generic products to many customers who have very similar profiles. So you're probably going to need to tie your commission data back at the customer level to be able to identify who you sold it to. So Incent allows you to do that. You can do this via automation. So if you send your transactions over to us in an automated file, you can include that customer information, and we'll automatically create those records for you. So you have that data available in the system for reporting. In addition to customer information, you can bring in product information. So for many types of incentive plans, we pay different kinds of commissions based on different product types or different product families. You can bring that information into Incent and track that so that you can report against it. And that will be very useful in the case of like Cloud Corp, where we have add-on products, some of which impact the original product's service life, and other products that don't have that impact. And so we want to be able to segregate in our reporting by product type. So we'll need to have this data available at the commission detail level. So pretty useful doing that. And then, of course, in Incent, if anytime you need additional information, if you have some unique characteristic that you've worked out with your accounting and auditing team that you really need to track at the transactional level, we offer all sorts of custom fields. So we'll be adding quota here, so you're able to create your own custom fields, and you can then use that custom information both in our results pages online and also in our analytics tool, both of which we're going to review in just a moment. So you can put custom data on here in order to generate more information when needed. So those are the main areas within Incent. There's lots of other fields and lots of other data that you can capture in Incent, but those are the primary ones that I think will help you to address the data needs for this particular standard. So let's move on and take a look at how you might approach getting your commission expense accounting data in your results, right? So we've brought in the data. So we've got product and customer, and we've got quotas now, and we've got rules generating, and we've gone ahead and we've done our calculations, and now what we have is results. And what results are is commission records, right? And so let's take a look at how in Incent you might be able to draw out some of the data you will need for commission expense accounting. Excuse me. So first of all, if you go to the results part of Incent and you take a look at the commission results page, the first place that you land when you come into there is this search screen. And search is pretty useful. It allows you to do some basic searches right off this screen, but you'll notice there right in the center of that page, there's an option for more search options. If you click on that, it will expand the page, and now you can see all sorts of additional information. So if I was the accountant working at Cloud Corp, I'd sit down with my commissions person and I'd say, hey, let's go through here and let's find the data that we need that we can search on to help produce the results we're looking. So this search essentially filters the data out, right? And you'll see right there, product name is one of the standard options of things that I can search against. So let me go search by product name. Let me look for that product that I know is an add-on product that adds to the life of the original product sold. So let's go find those transactions. Of course, if this isn't enough information for you, if you take a second and you go into the settings on your search page, just about every field that's related to your results is available for you to add into your search options. So if you really need to search on a business group to identify what you need for commission expense, you can go ahead and add that search right into the fields available for you in the search results. So it makes a pretty powerful search tool. Once I've created my search, I can save it, right? So typically, commission expense accounting is going to happen every month from now until forever. And so you want to save those searches so you can go back and find them, right? And you can put those filters together, you can save that information, and then you can rerun that search as often as you need to. And then when you do execute that search, what Incent will return to you is a bunch of information with all the transactional data that you need in order to produce pretty data heavy, right? You can download these search results. They download to a nice, simple Excel spreadsheet. And I would bet money that your accounting department would love to have this data in Excel. Just about every accounting department I've ever worked with has an Excel guru who then can work on looking at that results data in order to produce the summaries and the backup information they need to ensure that the details are auditable. And it's a good way to use Excel to iterate against the actual data that you need and find, write exactly what you need. But many of you will find that you need more than just our results tab. And in fact, most of our customers buy our analytics tool. So let's take a look at that super quickly. You can actually develop your own reports in the analytics tool. Now, I don't have time in today's webinar to give you a training session on how to use analytics. Hopefully, most of you are familiar with this tool. If you're not, I happen to notice today that we have training courses available even still this month. So you're more than welcome to join those training courses, and we'll teach you just how to build this kind of report. Right? This is Caitlin's commission report. That's for me to tell me what are all of the people that I sold to and the different kinds of products that I sold. And I'm able to build this report in analytics. And once again, because I am an Excel nerd, I can download that into an Excel format and provide that report to my accounting guru, right? To be able to further and do additional analysis here. So I'm talking pretty fast today, and I think we have lots of time. So just let's give us a quick overview. We talked about some of the areas of data that you can already generate in Incent, and hopefully what I'm sending you away with today from this webinar is that Incent is already a really powerful tool and has all the basic needs built right in that you're going to need to prepare this commission data. So you don't need to be worried or concerned that you won't have the tools. You already have the tool, if you're an Incent user, to produce the information that accounting needs to meet the standard. That data may include quota. It could include your rules. Remember, you can add those different result types and rules to break up those results further. You may need your customer information and your product information. We support that. You may need custom fields, right? You can add custom fields on your people records. You can add them on your order records. And we're going to add that ability to add them in quota so you can actually track quotas. We want you to go ahead and evaluate that results data in an easy online tool, right? So we provide you that searching functionality right online to be able to drill down right into your data through the UI. You know, you don't have to use Excel. You could actually produce everything you need right in a search in commission results in the system, and you can save that and customize it for your purposes. And of course, for those of you who need that data in a more kind of robust reporting engine, all of this is supported in our analytics tool. So the tools exist within Incent today. So hopefully you walk away from this webinar feeling like you're kind of prepared to help your accounting department to address the needs of this standard, which are pretty comprehensive and a pretty good challenge for the accounting department, something new for them to take on. If you need additional resources, Xactly is putting up a new commission expense accounting site. So we'll be sending an email out to everyone who registered for these webinars. And on that site, we're going to keep you informed of the latest and greatest information. This is stuff that the serious accounting nerd in me is really interested in, and I'm passionate about getting you the right information quickly, making sure that you feel confident in your ability to address these needs. And so we're putting up a website to track all the latest information. We have a bunch of FAQs for you. You'll be able to find the webinar recordings that we've done on this topic, and we'll also give you links and copies of these 4 primary documents, which are the very technical accounting documents that address this requirement, and those last 3 that address specifically this piece around commissions, which the accounting community calls the incremental costs to obtain a contract. Lots of words to say commission. The one I think is the most interesting, if you really want to get in and read something, is that TRG 57. You can find that online today at the FASB website, or we're going to send it to you shortly, so you can wait and get it all at once from us. It's a little easier to find on our site than on theirs. hence the reason we're putting it up for you. That one talks about, it's very, has really good examples in it of how you can approach the various strategies for commission accounting. So some good information there. So if we may, I have lots of time to answer questions for you all. So I do see, John, maybe we have a few questions coming in from the group.
Yeah, thanks, Caitlin, for that presentation. Just as a reminder for everyone, there's a Q&A button in your dashboard. So go ahead and enter in any questions you may have thought of. We'll start the discussion off with one question here. This person asks, does Xactly have the functionality to display the future amortization schedule for each commission payment?
So at this time, Incent does not do that calculation for you. We are evaluating building a product for you, and we're putting together the resources to do that now. We believe, having spent quite a bit of time looking into this right now, that most companies will want to approach this with a data-first approach. And the reason for that is what typically happens when a new accounting standard is put out into the market is that companies work with their audit firms to come up with a strategy and an approach that works for them. And the audit firms tend to go very deep into analyzing the data. And so having your data in good shape is the primary first step. And so we believe most of our customers will focus on that initially, and that the actual calculation of the amortization is pretty straightforward. It's a simple math to do that. And for many companies, they will simply approach that using spreadsheets or a similar tool today, and that until they're confident that their understanding of the strategy and their delivery of the data produces the results they need, they won't really be ready to build it into a tool to do that mathematics. So we are working towards producing those records for you, but they are not available today in Incent.
Thanks, Caitlin. This same person asked a follow-up question to that, asking if Xactly will be able to bring in the term of the customer contract to associate that with each customer payment.
So absolutely. So depending on the method by which you evaluate your strategy, we do have fields available on the order record. So it begs the question about where you're going to make that decision. In companies that we're talking to today, and we're working with quite a number of people who are early adopting this standard. And so what we're finding is that maybe a good percentage, a third of companies are planning to make those estimates as to how to handle the accrual and the subsequent expensing. They're going to make that decision at a pretty high level, at the product level, and they're going to capture that information in their invoicing or revenue management systems. And so it becomes data in those systems that then can be passed to Incent, in which case we can track that particular data all the way through the commission calculation. So they're going to put it on their order record. That order record comes into Incent. We calculate incentives, and then we can refer back to that particular product or methodology. Another big group of customers intends to do that after they've done commission calculations. So they'll actually apply a second set of rules to the commission data, and we'll look at those amortization and stuff after the fact. In that case, those customers are intending to do that with reports from Incent that they will then feed into a spreadsheet and add that information after. So it kind of depends on where in the process you want to make that decision, but Incent can support the management of the data in both of those cases.
Perfect. Thank you, Caitlin. Um, Here's a confirmation question. Just confirming that when you spoke earlier about the November 7th meeting, did you say that the TRG shot down the portfolio approach at that meeting?
So the TRG cautioned people about the portfolio approach, saying that it was not, for many companies, it would not be an appropriate methodology for a couple of reasons. One is that any subsequent events related to that particular amortization, and there are subsequent events like the add-on product scenario that impact that original calculation, and being able to tie that subsequent event back to that specific contract would not be possible using a portfolio method. So people had hoped that portfolio method was going to be sort of the panacea to make this easier. But the portfolio method is really only appropriate for those sales strategies where the distinction of customer is not particularly relevant. And so if you're in the retail industry, for example, and you sell thousands of items a day to your customers, and you don't need to track subsequent events, you could probably use the portfolio method for managing your commission expense. But for many enterprise companies, anytime where you have sales channels that you pay commissions to, or larger sales or a enterprise sales organization, you're going to need to be able to trace those transactions back to the original customer. And the portfolio does not support that.
All right, thanks. We've got another question here. Our company is currently using a trigger in calculating commissions. Is there another way of setting up the commission rule so it will not use triggers?
Yes. So depending on what you're using a trigger for. So triggers and incent can do a number of things. Many of you today are using triggers, and what you do is you bring in your order data into incent and you calculate what we call credits, right? So that first step in the calculation, you calculate credits by order, individually by order. And so you have this nice clean detail credit information order by order, but then you send that data outside of incent and you aggregate it on payee, and you bring back in what we call a trigger, which is sort of a fake order that says, rather than transaction by transaction, we know that the total value of transactions that a particular payee got credit for, we bring in a single item for that and we pay that individual. So if you're using that kind of a trigger, you probably are going to want to go in and eliminate those and simply calculate your commissions all the way through at the transactional level, because what you need to have at the end result, when you actually have a commission number, you need to be able to trace that all the way back through the transaction so that you can see, maybe what product was sold, what kind of quota it was sold against, what customer it was sold to, that kind of information. And if you're aggregating across payee or something like that using triggers, that's not going to give you that kind of information. So incent can already handle that detailed calculation. Many of you have simply opted to aggregate. So you'll want to kind of unwind that, I suspect.
Okay, great. Here's another question. How can I get help with making configuration changes in incent if needed?
Oh, so great question. So if you're an existing customer and you have some configuration like these triggers, our professional services team is kind of standing by, hoping they can help you with that. So you would contact probably your customer success manager to, if you know who that person is. Otherwise, just reach out through support and let us know that you're looking for some help around that, and we can provide you with a more detailed breakdown of what we would recommend that you do in those cases.
All right, and here's another one. Is there an election available to continue expensing commissions as they are paid?
So a lot of people are trying that one on, and people would like to be able to just continue under the old methods. But if you are, as a company, producing books under US GAAP and you want to be in compliance with this standard, you will need to make some changes. That doesn't mean that there aren't scenarios and strategies that people use where expensing commission immediately is totally appropriate. But it's back to that kind of setting up to paint your wall. You got to do the research, and you got to understand your strategy and what that strategy means to the sale of your products and services before you can make that decision. So there's no way to just simply say, I'm going to go with my existing method. You have to do the research. And some of you will feel fortunate that you don't have to change your methods.
Great. Thank you, Caitlin. Looks like we've run through all the questions that were submitted.
Awesome.
So at this point, we'll go ahead and close out the webinar, give a few minutes back to everyone who participated. Thank you again for the presentation. And as a reminder to all the attendees, look out for that follow-up email with the set of resources that Caitlin described we'll be sharing with you. And thanks again.